What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I wanted to talk to you about a really exciting direct listing that we saw today called Asana that shot up 30% right off its debut in the New York Stock Exchange, okay? Now, Palantir is also another direct listing that shot up over 30% today, but in this video, I want to mainly focus on Asana, and I'll address Palantir in a separate video, okay? Now, both these companies do have ties with Facebook, meaning that if you look here, Asana is actually a collaboration software company that was co-founded by Facebook's co-founder, Dustin Moskowitz, and he operates as the chief executive, okay? Now, to give you a brief background on what Asana really does, they operate as a work management platform for individuals, team leads, and executives. It provides a work management platform as a software as a service that enables individuals and teams to get work done faster while enhancing employee engagement by allowing everyone to see how their work connects to the broader mission of an organization, okay? That's a pretty useful tool, but what really excites me are actually Asana's customers here. They have some pretty big hitters as customers. You have Google pretty much right at the top. You have GE, Deloitte, NASA, the New York Times. You also have Spotify, Zappos, Slack, Harvard University, Uber, PayPal. So they already have a lot of pretty big customers who use their platform called Asana, okay? Now, what excites me about the fact that it's a direct listing is that as opposed to an IPO where a company raises capital first from banks or venture capitalists and other private investors, that's how an IPO price comes up, okay? So for Snowflake, for example, you had venture capitalists and private investors like Berkshire Hathaway and Salesforce's Mark Benioff. They raised enough capital to such a point that each share was IPO'd at $120 a share. But the problem with that is by the time it starts trading on the public market, we saw how Snow shot up to $245 right out the open, okay? Same thing happened with a stock like BigCommerce. They IPO'd at 24 but started trading at 68. So with direct listing, the main difference is that the New York Stock Exchange sets a reference price based on what the stock was trading at in the private markets, okay? So in this case, the NYSE set a reference point of $21 for the stock, and pretty much right off the open, they started trading at $27, okay, as you would see here. They started trading at $27, which is a 28.5% move, pretty much right off the open, okay? Now, to give a little more background on some financials for Asana is, first, Moskowitz launched Asana in 2008, developing software tools that compete with Atlassian's Trello. I'll actually talk about Atlassian a little more as well to compare the market cap and what kind of market share each of these companies have, okay? Now, this San Francisco company registered $143 million in revenue in its 2020 fiscal year, up 86% year over year, which is pretty exciting. Their losses also grew, however, to $118.6 million in fiscal 2020 compared to only $50.9 million in fiscal 2019, okay? Now, one big challenge is that an unspecified number of Asana's customers are small businesses that have adopted its technology and are suffering through an economic downturn caused by the pandemic. Now, even though this is a concern, this is still pretty temporary because I was actually looking at Atlassian's revenue and quarterly revenues as well, and I saw that they took a pretty big hit as well, okay? Now, if you actually look at Atlassian here, you can see that Atlassian was starting to get profitable during the third and fourth quarter of 2019, but in the first and second quarter, even they started taking losses in spite of being a much bigger company, okay? So knowing that a private company like Asana, which has a much smaller market cap of only $4 billion, it is pretty expected that they will lose some income, especially considering the majority of their customers are actually small businesses, okay? Now, many of their customers do adopt their technology in a bottoms-up manner where, they start off with different tiers or a lower priced product of theirs and go into like higher level enterprise level products. And so there has still been a churn among them because of the pandemic, okay? Now, Asana, they reported revenue of $52 million for the 3 months ended July 31st, which is up 57% year over year. Now, the net loss during the period jumped to $41.4 million compared to $15.6 million for the same period last year, and the company is yet to turn a profit, okay? Now, these days, a lot of tech stocks especially tend to trade at pretty high valuations irrespective of not being profitable, but that's pretty much expected. And what I really look for in companies like this is the potential market share that they have and how much market share they have compared to other leaders, okay? Now, if we actually look at the balance sheet for Asana here, for example, their total assets right now are at $421 million. Cash and cash equivalents is 351 million, but their total liabilities are $561 million. Okay, so they're not profitable yet. Their liabilities are definitely a lot higher than their cash and cash equivalents, which means they won't be able to cover their debt in the short term. But they still have a huge market share to take over. Their revenues are growing at a pretty impressive rate. So over time, I think they'll still do exceptionally well. Okay, and to compare it with Atlassian here, Atlassian has cash and cash equivalents of $2.1 billion, which is definitely huge. That's literally 10x that of Asana, but even they have total liabilities of $3.3 billion. Okay, so another thing I want to compare was that Atlassian has a market cap of $45 billion, whereas Asana's is only $4.43 billion, as you can see here. Okay, so in terms of financials, as a comparison between cash and cash equivalents versus their liabilities and the fact that neither of them are turning a profit yet, they are very comparable in this specific industry where they provide this platform as a service. And what gives me a little hope for Asana though is that the market cap is really small, and in terms of the total addressable market, they do have some potential to take more market share from Atlassian. Okay, eventually, if they have the potential to become a $15-20 billion market cap, which is still less than half of Atlassian, that means this stock can still potentially 5x from here over the next maybe 5 to 10 years. Okay, so that's what I'm really keeping an eye out. I don't know if I'll buy any shares right away because they shot up right off the open. Pretty much like IPOs, where I wait for a company to shoot up a little and come back down close to IPO price before I buy in. Even with Asana, that's what I'm looking for. It shot up 37%. I would be excited about it if it does drop in the short term and gets back to the actual reference point of $21 for the direct listing. Okay. Now another stock that started trading as a direct listing is actually Slack. And if you look at the history of Slack, they started off at 38.50 as a direct listing, and they're still very, very far off from actually getting back to that level. Okay. So that's why I'm still keeping an eye out for it. I'm not going to buy in right away. I want to see it go back to the reference point. Ideally, under $20 would be great to buy in, but with such a small market cap, guys, there is always a lot of potential in the future, considering the addressable market that Atlassian gives you an idea of. Okay, so that's what I wanted to share with you guys. It's definitely an exciting direct listing that I'm keeping an eye on. Let me know if you have any questions below. If you enjoyed it, please just smash the like button. Again, please to look at the link for our Facebook and Discord group. Join for free, guys. I've made a couple of alerts today as well that I've been working out pretty well. Both Apple and Facebook calls that I talked about last week have shot up quite a bit. So if you want real-time alerts like that, please be sure to join the Discord group, and I'm sure you'll benefit a lot from it. Okay, it's completely free, like I mentioned. So please do subscribe if you haven't already, and thanks again for watching, and until next time.